news. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It is Tuesday, June 18th. June 18th. We have off tomorrow for June 19th. So I will not be doing a podcast, but if you'd like, I actually did 2 newsletters yesterday. I did a bonus paid newsletter, and the newsletter is free during the week, but I did a bonus one. Alpha picked stock. They picked the stock yesterday. I said, hey, let me look at that one. And then Motley Fool at the same time sent their 10 best June stocks. So I did an analysis of the top 3. So you got 4 stocks yesterday if you're a paid newsletter subscriber. The free version was completely free, and so you got enough yesterday. But tomorrow I'm taking the day off. So, NASDAQ 100 just closed at record highs for the 6th straight day, and this isn't normal. Caution is necessary. A clarification on my, hey, the stocks are going to crash yesterday. So if you look at yesterday, the headline was, is the market going to crash? Things just look too oversold for the economic data and Apple, Microsoft, NVDA, VRT, and other opportunities. A caveat to this, I'm not saying that the narrative has changed and that we are going into a bear market. I am saying that during the short term, this is an overbought market. And for a healthy market, we've got to pull back. Now, if you see, this was COVID and an obvious pullback. This was 2021 and a little pullback before we set off for that record run. And then this was a huge pullback in 2022 as the rates got increased. And there was a reason for that. But during all of these big upturns, you see a healthy pullback. We need a healthy pullback. We had a minor one here in March that went into April, and then we shot back up. Now, I am saying that in order for July to be good, we've got to see a pullback. It's nothing major. I'm not calling for a crash on anything. The Qs is still in a very, very good place. We have confirmation on the 4-hour. And don't you wish you bought down here at 426, because we're at 485 right now in pre-market. It's not up huge. Retail sales came in lighter than expected. This is what I'm talking about. We have this record run where the consumer is stretched. I talked about it yesterday, and maybe I didn't make it clear, but inflation is running at about 3%. GDP is running at 1.3%. That is not good for a healthy economy, yet we are still running. The reason is because these top 5 stocks, and we can talk about it, it's these top 5 stocks. They account for 60% of the S&P 500 year-to-date return. It's NVIDIA, it's Microsoft, it's Google, it's Meta, it's Apple, it's Amazon. And then there's Broadcom, Lilly, Berkshire, and Qualcomm. Boy, all of those stocks, except for Berkshire and AVGO, which I actually own, okay, they're not in the core portfolio, but every single other one is in the core portfolio. And the core portfolio is greatly outperforming. It's 100 shares of each stock. You can follow it on Savvy Trader. You get to it by going to my link tree, and then you go to Savvy Trader, follow all of my trades. You go down there, and it's the core portfolio. You can follow the core portfolio. It's 100 shares. Now, I will tell you, based on news today, I think Boeing coming out of the core portfolio. I think it is. I'm just sick of it. If you're holding it, I think you can hold to it, probably 200. But I'm just sick of it. I mean, every piece of bad news that comes out of there is just crazy. But let's compare the core portfolio. Again, this is 100 shares of each company. And yes, I did sell. When NVIDIA went through the 10 for 1, I sold. I had 900 shares. So I'm sorry, 10,000 shares. So I sold 900 shares of this. And NVIDIA, I didn't want to, sold it at 132. I want to hold on to it. But the core portfolio is just 100 shares of each stock that's in the core portfolio. As I add to the core portfolio, Dell might get added to the core portfolio. HPE might get added to the core portfolio. There are a couple of names, VRT. There's a couple of names that I might add to the core portfolio, and I'll just add 100 shares of the stock. Now, it's quite a big value. But the core portfolio, understand, it wasn't this big when I started it. Over the last year, the core portfolio is up 44%. Again, it's 100 shares of each of these companies. There's no magic to this. These are stocks that most likely you can get into and not be killed by them. Now, there are a couple that you've been killed by. Tesla is down 30% since I bought it. Boeing is down 16% since I bought it. Pepsi is down 10% since I bought it. Roblox is down 13%, but I tell everybody all the time, Roblox is a $40 stock. You can buy it under 40, and we'll go over that one as well. Cleveland Cliffs is down 10% since I bought it. I don't trade in this portfolio. This is simply 35 names that you can buy into, and you can probably do fine in them. If we look at the total return, SMCI up 184% since I bought it 1 year ago. Costco up 66% since I bought it 1 year ago. Meta up 78% since I bought it 1 year ago. Qualcomm up 85% since I bought it 1 year ago. NVDA up 201% since I bought it a year ago. There are a lot of names that are up. So what you have to do if you're new to investing is just go through that and pick the names. If you are listening to this, I would tell you, if you don't have NVIDIA, if you don't have Microsoft, if you don't have Google, if you don't have Meta, if you don't have Apple, if you don't have Amazon, if you don't have single stock exposure to those five, you're out of your freaking mind. Now, you can buy QQQ. Remember, we always talk about, hey, people have different risk tolerances. I have different risk tolerance than you. So don't follow me. Do not follow me into trades. But if you're going to build a single stock portfolio, you better be aware of which stocks are going to perform. It's not going to be GameStop. It's not going to be AMC. It's not going to be the meme stocks. It's not going to be, you can trade Tesla. But I personally don't own Tesla. I own it in XLY. I have exposure to it in XLY. So in a lot of these bottom names, Tesla is in the core portfolio. Intel, I own a bunch. Boeing is in the core portfolio. CRM, I own. United Health is in the core portfolio. So there's quite a few names at the bottom of this list too. But that list is meant to guide you. It's not meant to be hey, this is how you should set up your portfolio. It's meant to guide you and to show you that stock picking will actually work at some point in time. So record high after record high. What are the best S&P 500 ETFs? This is a good one. I mean, they give you VOO, SPY, IVV, SPLG. They give you a bunch of them. We were just talking about XLG, the top 50. I think that's a better ETF than any of the S&P 500 because the top 50 are working far better than the other ones. So I like that one. So a little bit of caveat on my thing from yesterday, on my take from yesterday. It's a little bit, hey, it's short term. Short term, we need to see a pullback. Long term, I will today at June 18th, okay? And I said this on 4/20, on April 20th. That was right around here when I said, hey, you should buy QQQ. I said, mind you, we will end the year higher than $420 on the Qs. I will almost guarantee you we will end the year higher than 480 on QQQ. Now, that doesn't mean go out and buy it right now. The RSI is at 82. The MACD is super high. I wouldn't be adding to my position right now. I'd be waiting for a little bit of pullback and having some kind of, patience on this one. But again, we're in a bull market. So you want to be exposed to that bull market, but you don't want to necessarily be adding to it at the wrong time. And in my opinion, I think now is the wrong time. History shows the S&P 500 sees a sizable drawdown as Fed starts to cut rates. That's and it's statistics. It's statistics. So it's interesting. It's something to keep an eye on. But in my mind, we haven't seen historic rate hikes like we've seen in the past year. In 2022, those rate hikes, you didn't see those before. And we saw an enormous downturn in the Qs. We've seen it rip past the previous highs. And that is because the economy is doing well. I just caveat that GDP is slower than inflation, and the Fed is typically slower to respond. Elizabeth Warren is on TV screaming at Jay Powell, you've got to cut rates because the bottom half of the society is hurting much more than the top half of the society. The top half of remember how an economy works. When you raise rates, it's not the rich and the people that have cash on the sidelines that get stretched. It's not the companies that like Apple and Google and Meta. It's not those companies or Amazon that have a ton of money and a ton of cash to spend. It's the smaller companies. It's the smaller, the people who make less money in society. Those people are stretched significantly more as the rates stay higher. And so Jerome Powell, I think he's got tremendous empathy. I think he's doing a very good job. I think he wants to cut, but I think he also doesn't want to be the guy that cuts too soon and then inflation comes roaring back. And that's the problem that he's had. That's the balance that he's got to do. So I do think we're in a bull market, and I do think that with those rate cuts, I think we do see a continued upward trend. So that's just it. Now, Celsius, the CEO, I said it yesterday, he was on CNBC yesterday. Celsius Holdings is defended by analysts after a 6-week drop. And yeah, there were a couple of analysts that came out yesterday and said, hey, we don't see it. Now, if you didn't see it yesterday, I'm sure you can YouTube it and find it. The Celsius CEO was on CNBC yesterday, and he awkwardly, and I say awkwardly, and I'm putting that probably kindly, but he awkwardly held a can of Celsius throughout the interview. He didn't take one drink. He didn't sip it. While he was getting asked questions, he didn't take a drink. He just sat there. It looked like a cup of coffee, to be honest with you. And I didn't know what it was. And then by the end, he kind of held it up and just pointed. It was so awkward. And the other thing is, he said he was seeing a slowdown and that they're seeing tougher comps year after year, which is true. When a company has this type of explosive growth, it's going to be hard for them to keep up. And he brought up inflation, and he said higher gas prices, and the consumer is stretched because of higher gas prices. It was pointed out to them, and then he awkwardly went into some rambling thing. He said it was brought up to him that gas prices are actually down. Gas prices didn't go up as much as they have historically in the summer. So, I don't know. I mean, it seemed like he was reaching for reasons why Celsius was doing poorly as the stock. Okay? What bothered me was that he didn't take a drink out of that damn drink. None of that convinced me, and no article that I read convinced me that that this is a stock that you should invest in. I think you can absolutely trade it. I think just like any reaction on the market, any reaction is an overreaction. If we look at Celsius from a quant standpoint, let me just go over here. We can see it is a hold in the quant. And if we just go and look at CELH over here, it's down 2.57% yesterday. It's down in the pre-market. The valuation's an F. The revision's a C. So something's changed. And the change is because Pepsi's just not buying as much as they thought they would. So the story's changed. The CEO was awkward. I think that adds up to me. I'm out. If I were in it, I'd be out. I don't know that I'd necessarily sell it right now because you're selling into weakness. And I do think that you probably have 70 in this stock. But I would wait for it to, you're in this range. When we talked about a trading range before, back in December and January, I said, hey, this one in particular, if you're waiting for it and you're looking to actually trade it, this is the range that you want to look at, because look at this range. If you're down here in the low 50s or even in the high 40s, it's probably a buy, because twice you've bounced off of there and gone up. And on this dip, if you bought at 52, you made a ton of money. That's a 57. The algorithm got you out at 57%. You could have gotten out with more. Again, we double topped at 99. That is a huge, huge drawdown. Now, what's ironic is we've come back within this range. So the valuation at some point makes sense for you to get into. I just think that their growth is slowing tremendously. So that's one that I would probably be a little bit hesitant of. Now, Dell, the Michael Dell was on. Dell is one that I want to put in the core portfolio. He was on yesterday, And it soared. It just soared. If we go over to Seeking Alpha and we look up Dell, I think it was up like 7% yesterday or something. Let's look at Dell and we'll look at the symbol. It's a hold in the quant. It got a new price target of, I think, $150 yesterday. Dell gains this morning, and Stanley reiterates its top picks after management meetings. It was around 150. This isn't one that I think is crazy at 142. This particular, here, I need to probably put this in my notes so that I include it in the newsletter. But yeah, my notes are Michael Dell. And it took off yesterday. It was up 5%. It's up at 142. It's up another 2% in pre-market at 144. He brought up the server margin shortfall and said it was a reflection of being in the early life cycle stage. He thinks margins will improve with overall growth. He also thinks the server business gets more profitable when they start to sell services into relation to that hardware. Now, the $150 price target, if we look at Wall Street, their average price target is $157, which today represents an 11% upside. Now, if you look at the revisions, it's a B+. There's one person that brought their earnings per share down. That's it. If we look at the ratings and we go to Wall Street, I want to see how it trades against the price target. When you look at this, it's below the actual price target. Well, for the past year, it hasn't been below that price target. It's been hugging it. Look at how low you are compared to the price target. So that's what I would say. 157. It's not a bad buy here. If we go and we look at the chart, we are looking at a fairly low MACD. It's under the oscillator. It just crossed up. That 133, great buy. Great buy. You're at 144 right now in the pre-market. That is getting towards the gap fill. Now, the gap fill goes all the way up to 167. So 157 is the price target. That's an 11% upside. We've talked about gap fills before. I think, Dell, you fill the gap. Again, he presented a much different posture than the Celsius CEO. When I compared these two CEOs, Michael Dell, who is selling, by the way, if you go over here to FinViz and you just look at Michael Dell, we look at the insider sales, he's selling billions of dollars of stock. Look at this. I mean, June 12th, 26 million. I'm sorry, 159 million, 133, 179 million, 18 million, 469 million, 379 million. I mean, that's billions of dollars. That doesn't even include the ones that he did back in March and January. I mean, he's been selling a lot of stock. What has that done to the stock? It hasn't pulled it back enough. He's been selling billions of dollars of stock, and it's been held up. Once he stops selling, this stock's going to fly. And the valuation, again, the valuation isn't nuts. SMCI went up like crazy yesterday. And again, it's because SMCI is up 1%. It went over $900 yesterday. It's at $897. Boy, don't you wish you bought at that $780 price? Well, if you had my algorithm, maybe you would have bought at the $780 price. My algorithm is in Trendspider. You get it when you sign up for Trendspider. How do you get it? You go to the link tree. The link is down below. It's linktr.ee/daily stock pick. It's this top link. And the top link takes you over to Trendspider. It's $53 a month. And you get the algorithm. Again, SMCI, you make 736% if you just use the algorithm. That's it. Just got you out with a 5% gain. And you know, yes, you lose. You win 52% of the time. 52. That's a great winning percentage because your average win is 36%. It's over 24 months. There's 25 positions. So it's about once per month. It's not a crazy thing. So yes, I do think that Dell and SMCI, I personally own both. The other one that took off was HPE because these guys are in the server business as well. And you can see after their earnings, they didn't gap down, they gapped up. And the buy here at 1987, you're doing really well with that one. The algorithm makes you 60% over 2 years. You win 45% of the time. Average win 6.84%. It's 29 positions over 24 months. So again, it's about once a month, maybe a little bit more. But again, these types of stocks, you can trade in the algorithm and you can find opportunities. What other types of stocks can you do? We talked at the beginning about the core portfolio. Well, let's look at the core portfolio in chart form. We're not going to go over fundamentals. This is just chart form, and I'm going to do it really quick. I'm not going to publish these, but if you have Trendspider, you can follow along with the 4-hour algorithm. Again, Apple extended, MACD's high, RSI at 71. It is high. Your support is $200. The resistance is 220. That's the new price target that they just put on it, but 220 is your resistance. Amazon, your resistance is 188. That's the previous all-time high. That is a double, triple, quadruple top. It is significant resistance. It's trading at 183. I would rather see you buy at 189 or 190 after it holds than to see you buy at 184 and have it come back down here to 170. You buy when the algorithm tells you to buy. Right now, the algorithm has buy in here at 181. I sold a bunch at 176. I do think that 188 holds. Old resistance turns into new support. So once we get past there and we hold there, it'll be fine. Boeing will be a $200 stock if you want to buy it at some point in time. That 176 is a support level. They're testifying. Bad news just keeps coming out of this one. I am going to probably take this one out of the core portfolio, but it's still a company that many people need to rely on. Their revenues are going to be good. They're just not going to sell new planes because nobody wants to buy their planes. Bank of America. But by the way, people will need to buy their planes. So at some point in time, that story changes and it becomes Bank of America. Algorithm makes you 41%. It just got you out with a 0.45% gain. Buying and holding makes you 17%. I look to add this one. The valuation of this one is not crazy. I personally own it. Cleveland Cliffs. This one has dipped down so much. The support level is right here at $13.73. It's about $14. You're trading at $14.84. This one, what you want to the key point on this one is you want to come back before the pandemic. And where was it trading before the pandemic? Well, it was trading at about $11. That is your ultimate support level because a lot of things have changed in Cleveland Cliffs and they're making more money. But do we expect it to get back to that 22? I do. We have a double top there that comes off of this past resistance where it broke out after a pullback and then it just came back and it, your support level, again, I think it's 1373. I think your resistance level is 22. Costco, this is one that just keeps on going. Just keeps on going. It's got another cross up in the algorithm. Even though your buy-in here was at 721, it looks like it's going for another run. It is extended. RSI at 73. MACD super high up. It is an incredible, incredible stock. This is one that you want to own with Walmart. I don't care what the valuation is. These guys, once they do a membership raise, and they haven't done one in about 6 or 7 years, and they do one typically every 5 years, once they do one, because inflation's coming, you're going to see this one take off. It's at least a $900 to $1,000 stock. Disney. This is one, if you want to buy it under 100, you can buy it under 100 at some point in time. This just got a cross up, by the way, today at 101. At some point in time, this gap gets filled back up to 116. It's a $120 stock. FBCG, this is the blue chip growth, which has NVDA, Apple, Microsoft, is everything. This is a Fidelity one. This is an ETF that I just keep in here. Boy, don't you wish you bought there at 36. Again, for ETFs and things like that you want to hold long term, I don't suggest trading, even though over 2 years, you make 68% in this. 68%. Buying and holding makes you 84%. With ETFs like this, I just suggest using the algorithm as an entry. Then we have Google. I've said it before. I think Google is a buy anything under the 150. Is it going to get back there? I don't know. This is at all-time highs. The MACD at reasonable levels. RSI just kind of ticking along in no man's land. This is one that's going to monetize AI. I believe in Google. I hold it. Goldman Sachs. This is a $500 stock. I mean, if you don't think that Goldman Sachs is going to make a ton of money, you're wrong. It's a $300 book value. I was pounding the table back here. I said down here, anything under 400, you should buy it. It went all the way up to 470, somewhere in that neighborhood. Would I buy it now? No. It is extended. Bollinger Bands are flaring out. But if you want to old Goldman Sachs, I would say just buy the XLF and buy the financials. That way you own it. KO, which is Coke. Anything over 60, you sell it. Anything under 60, you buy it. That's just the way Coke is gone. Buying here at 62, it got you out with a loss. You're out right now. You have weakness. No reason to buy it right now. Wait until it's under 60. Eli Lilly, we've talked about GLP-1. These guys are printing money like a tech firm. And I don't care about the valuation. It's not extended at $889. They are going to sell a ton of their weight loss drug. And it's just going to compound money. What they're doing is they are taking all of the diseases that you have and likening them to GLP-1. Oh, you snore at night, you have sleep apnea, you need to lose weight, we'll put you on GLP-1. Oh, you have diabetes, we'll put you on GLP-1. That way you won't eat, and then your diabetes will be cured. Oh, you have an itch on your foot? Yeah, that's got to be GLP-1. You can't reach your feet because your belly's hanging over, so you can't reach it. That's GLP-1. Because you got an itch on your foot. Oh, your elbow, you banged your elbow? Oh yeah, you got pain. You're overweight, GLP-1. That's how these guys are making money. Everything they are designating to GLP-1. And doctors will be able to prescribe it. It's kind of like OxyContin, if you ask me. I'm not going on that stuff. I'd love to lose weight. I'm having trouble losing weight, but I'm not going on it. Meta, buy it under 500. If you can get it under 500, we talked about it back here at 450, was going to fill this gap. It filled the gap. Algorithm has you in at 475. You make 116% over 2 years in this stock. Again, part of the greatness of the algorithm is if you can't sleep at night knowing that you're holding these stocks, well, the algorithm kind of, if you back test it, and previous results don't predict future, but if you back test it and it works, what makes you think it won't work in the future? I mean, that's the likelihood. You buy it here at 475, you're doing pretty well. MPLX, this is an oil stock. This is a midstream oil stock. It pays 9% dividend, close to 9%. I've been buying this one since it was in its $5, $6 during the pandemic. It provides me a 9% dividend. I just sit there and hold it. It's one of those energy stocks that you just sit there and hold. Microsoft. This is one that at 430 has incredible support because you've seen a couple of pullbacks there or a couple of tops. The old resistance turns to new support. That's your support, 430. Do you want to buy at 447? They just upped the price target to 450. And what does it do? It jumps to 450. Netflix, this is a $700 stock. We've talked about this. It's $700 was the previous high. That's where it's going. It's at 675. If you want it, get it. It's the only streamer that will work. NVIDIA, we talk about the PEG ratio all the time. This is not an expensive stock at 131. I talk about this a lot because this record run up here, algorithm got you in at 83, which is $830. People say, yeah, but it's so expensive because I could have bought it back here at 51. Well, now it's at $1,310 pre-split. $1,300. Remember when it was struggling to get over $1,000 over 100? Well, it did. After its earnings, it did. It gapped up. I wouldn't worry about holding this one wherever you can get it. Oxy. This is Occidental Petroleum. Warren Buffett owns a bunch of this. Am I buying here at 60? If you want to buy this, buy it under $60. $60.72. You can buy it. You can just hold it. I'm just holding it. I think my average purchase price is like 58. It'll get back up to 67, 66. I'll sell it again. I don't sell out of it, but I trim it. My average purchase price is there. I just hold it. Pan W. If you want Palo Alto Networks, I do think that this one is going to fill the gap back up here to 365. This is one that is just getting over its 200-day. You have a golden cross. Is it expensive? Yes. Cybersecurity, they need it. The big one in cybersecurity right now is CrowdStrike. Own one of the two or own both like me. Pepsi, we talked about Pepsi with Celsius. Pepsi is one where if you want to buy it under 160, just buy it under 160. If you want it at 166, get it. Now, GLP-1s are the death of these sugary drinks. And you're underneath this trend that I drew on the weekly. And it's just using its 200-day as support. So the 200-day is fine. Palantir, we talked about Palantir a while ago. Any reaction in the market is an overreaction. This one had an earnings gap down. That's an overreaction. Okay? It filled the gap. I said when it was at 21 here, you should buy it. If you believe in Palantir, you should have just bought this one because it's back at 25. Now, where does it go from here? It probably goes to 30. Do you want to buy it? Until this turns to support, it is resistance. So until this holds over this $25 mark and holds for an extended period of time, it is resistance until it turns to support. Do not rush out there and buy Palantir here at $25. Because if it's back down at 20 next week or on this big pullback, you can take a look at it. Here in June, we have seasonality of Palantir going back. Let's see. I think it's only 4 years old. So you can only go 100%, 67% in July. But then you get into August and we're looking at some weakness coming up. So I do think that you have an opportunity to buy Palantir at a lower price. Kudos to those that bought it. Qualcomm, $228. Boy, remember when I was talking about this one at like 110? 108 back here? That was just November. That wasn't that long ago. You've doubled your money from 108. You've doubled it since November. This is one of those that has gone crazy like NVIDIA. Yeah. So it's in the core portfolio. Am I buying here? 200 is your support. 193 is the old support, so just call it 200. QQQ, we talked about there's two levels of support here. There is 460. That is super support right now. And if you break that, it's 450. Simple as that. Roblox. This is one that will cover the gap up to 40. And we talked about it. Down here, when it was at 32, felt uncomfortable buying it. You know why? It's expensive. It will cover the gap up to 40. It's at $35 now. At some point in time, it covers that gap. Your 50-day just started moving positive. Shopify. This is an $80 stock. Again, this is a simple one. It will cover the gap. This is the Motley Fool just said it was the number one stock for their to buy in June. It is an $80 stock. And why is it 80? When you go to the weekly and we look at this, the 200-day is sitting right at 80. And that's where it wants to go. And it wants to be brought up to 80. And right now, you're just seeing some weakness here from the earnings. I think any reaction in this one was an overreaction from earnings. Then we got SMCI. Where's this one? I told you it's trading sideways. We had a huge move. We were up over 900. Don't you wish you bought at 780? Because the algorithm said to buy at 780 on June 11th, 7 days ago. And you're at 900 now? Great buy. Simon Property Group. This is one that's just going to trade sideways. The malls, the retail sales just came in. It's weak. The RSI is down at 39. I don't know that it necessarily goes much higher. It's in the core portfolio because it's exposure to retail. It's above its 200-day. The 50-day is still moving positive. The Bollinger Band's just cinched up. If we are going to get another move, my guess is that we move to 170. That's the high that it was in November 2021. Tesla. There's rumors that they just started their Shanghai full self-driving test in China. That moved the stock. Elon announced this morning that the master plan version 4 is coming out, and it's going to be epic. If you don't know, that is where they put the goals of the Tesla organization into a plan, and they worked on it. His master plan, it's just been a masterful, master plan. What he's accomplished is amazing. Now, I'm not a huge Elon fan, but as far as a corporate guy, what he has accomplished is just phenomenal. Taiwan Semi, they're going to raise their prices. They announced that they're going to raise their prices. So Apple, Microsoft, Qualcomm, NVIDIA, they make all the chips, and they're going to raise their prices. This is one that, again, the core portfolio, it's performed. Uber, this is an $80 stock. Uber, it's an $80 stock. We talked about it. The only reason this got brought down is because Elon, August 8th, about the cyber, the robotaxi. That's the only reason. Other than that, I think you're going to see them kill on earnings. I think it's an $80 stock. I was pointing out, I bought more at 73 or 63. UNH, this is a $500 stock. If you want to buy it under 500, just buy it under 500. Wait for the algorithm to tell you. It's just got you out with a small loss. But you've got a gap down here that hasn't been filled down. The ultimate support on this one is 450. And why? If you look at the weekly chart, we've seen it pop there 4 times. 4 times it has popped there. And again, it pops right back up. So United Health, great one. VOO, I choose VOO over SPY. The reason is if you go back and you look at the performance, VOO does outperform SPY. SPY is more for options. VOO is more for investment. Walmart. This is one you just want. I shop every week at Walmart. I'm usually in Walmart at 2-3 times a week. I am choosing to get rid of my Target once it shows some weakness, and I will replace it with Walmart or Costco. That's why Walmart and Costco are in there, is because I shop there. The valuation is good. If I shop there, the rest of America will shop there because everybody loves doing what Gary does. XLK. This is the technology fund. This has gotten a huge pump because NVIDIA is now a big portion of this. They're doing some rebalancing over next week, so NVIDIA will be a buy. XLK, I just have exposure to everything. Just look at it. I mean, if you can find me an ETF that works better than XLK, I may buy it. But again, the cost is low and the value of the stocks that it gets you is great. XLY, we talked about it. This gets me exposure to Amazon and Tesla. That's it. I mean, it's 50% is Amazon and Tesla. That's it. They'll rebalance probably over the next couple of weeks. If you wanted to trade XLY, the algorithm makes you 49% versus buying and holding makes you 24%. The algorithm got you in here at 175, so you're at 181. Again, the algorithm provides me a way to quickly look at this portfolio and to see where I'm at, where it's trading as compared to the algorithm. Do I want to trim it? Is it into strength? Then I look at the weekly. It's a very simple process. It's all in Trendspider. How do you get Trendspider? You go over to my the link tree right here, click on that link, sign up for Trendspider. Again, what happens is when you sign up, you email me. How do you get my email? What's on the link tree? It's up here in the upper right. You email me and I'll send you the 4-hour algorithm. I'll send you the 65-minute algorithm. And if you want to day trade GME or anything like that, I send you the 5-minute algorithm. I send you all of these watch lists. You get the daily stock pick core portfolio, which you can follow for free on Savvy Trader. So don't think you have to pay for it. But I will also send you all of the other watch lists, the custom watch list, all of the covered call ETFs, energy names that we trade, leveraged ETFs, including TQQQ and SQQQ, low-cost Vanguard, spider sectors, the watch list, everything. I send you everything that I use. So everything that you saw me do here, you can do it. Again, tomorrow's Wednesday. It's a portfolio review day because we have off. So let's go to show social requests. If you guys want, anytime you send me anything on the socials, Facebook, Instagram, Twitter, or X, Vase, orange, whatever you want, I'll look at it. Crown Castle. Jacob wants me to look at Crown Castle. I do actually think, this is CCI is the symbol. I think I have some friends that work at Crown Castle, to be honest, but I'm not sure. Stock chart looks weak, and I think if it's the right company I'm thinking of, and we'll look at it in Seeking Alpha, but it looks weak. I mean, what you want to see really is a bottom left to upper right stock chart. This looks like, in the short term at least, from January, upper left to bottom right, and it does look like it's extremely weak after its dividend. Let's go and look at Crown Castle here, CCI. Crown Castle let's go to the Wall Street has $112 price target. 17 analysts in the last 90 days, 11 are hold. That doesn't look good. The quant has it as a sell. From a summary, CCI is at risk of performing badly. Oh, it's a REIT. It's a REIT. Yeah, and I do have friends that work here. It's a REIT. I'm just not a fan of REITs. Again, the yield is 6.5%. What happens when you pay out 6.5% is you don't have money to reinvest in your business. And the revisions, it just looks like crap. I wouldn't invest in it. Jacob, I hate REITs. Dividends are meant for, let me go over this just in case there's new stuff. Dividends are meant for income. They're not meant for growth. You'll see all of these people talk about dividends, and how a dividend portfolio will make you money. Yes, it will make you money. But ultimately, your actual dollar and your capital gets diluted. And because they have to pay this, they don't have money to spend to invest in the business. So take an apartment complex, okay? Somebody buys an apartment complex and they're getting all that rent. Well, after all of your expenses are paid, you pay the dividend out to people, but you don't upgrade the actual property and you don't maintain the property. Well, what happens after 10 years? Well, the property is probably, condemned, or you're not getting the rents that you used to get. And so your actual capital dollar and the value of that goes down. So I just don't like it. Dividends have a purpose, and it's for income. Unless you're 75 sitting in a rocking chair and you need to pay your assisted housing, don't invest in that stuff. Cade, hi Gary. In regards to the algorithms that you talk about, is that only for day trading, or can it be applied to long-term investing as well, such as finding a good entry point? Thank you for your time. Cade, I just went over it. That's how I manage my portfolio. Is I have a watch list of my brokerage holdings. You'll see it up here. I have brokerage holdings. So everything that I own, I put in that brokerage holdings. And on Saturdays or Sundays, one day a week, I will go through everything and I will look at strong and weak, and I will look at the amount that I have in my portfolio. DocuSign is a great example. I bought DocuSign when it was said that, hey, we're going to have somebody buy us. And that was, around this time. I bought it. It's like $64. It popped up to like $66. Should have sold it. It hasn't gotten there since. Now, I looked at it this weekend and I said, I don't want to sell into this weakness. It's not a lot of money. I mean, we're talking, a 4-figure investment. For me, that's not a lot of money. So I don't mind losing a little bit more if I think it's going to pop. DocuSign's a good business. But when we go over to DocuSign in Seeking Alpha, it's not a great business. I mean, the valuation, it's still expensive and it's not growing like it used to. The PEG ratio, though, which figures out the growth into the price per earnings, it's 51% below the sector. So I don't want to get rid of it. But again, that's how I manage my brokerage. Is I use Trendspider to do this. You can use whatever tools you want, but there's 3 main tools that I use. The first is Trendspider, and we've gone over Trendspider. The second is Seeking Alpha. You see me use the quant. Well, how do you get it? It's the second link on the link tree right here. You get 20% off, which saves you $50. I think it saves you $50. It's 20%, whatever 20% is. And you get a free 7-day trial. So to get those quant ratings and to see all of the metrics, yes, I think it's $189 for a year. It's worth it to me in order to pay it. And yes, I paid it before I was an affiliate. Yes, I paid for Trendspider before I was an affiliate. The only one that I didn't pay for, and it's because it was offered to me, and I turned them down twice, was Alpha Picks. And I'm not a fan of, hey, buy at this price or buy at this time and sell at this time type of services. I don't think that's a good one to be in, because I think it kind of creates this mess of, why am I relying on somebody else to tell me? But the reason why I decided to become an affiliate of Alpha Picks is the performance. Now it's 122% versus 35% on the S&P. They tell you it's 2 picks per month. They just had one, and I just went over it in my newsletter, but they just had one, and some of them don't make sense to me at all. And so what I do, there's a couple of ways you can use Alpha Picks, and we can go over here to the Alpha Picks thing. And if we go over to the about section, there are 3 ways that you can use it. Buy at least 5 strong, and as a new subscriber, buy at least 5 of their strong buy. You get the ratings for all 30-something stocks that they have, and you get the analysis of each. You can buy 5 strong rated ones. That's what I did in a portfolio. I bought 5 of the most recent strong buys. You can buy the entire portfolio, which is great. I mean, again, if you have enough money and you want to spread it out, you can buy the entire portfolio, and you can buy it based on, they do weight the portfolio. So you can buy it based on their weighting. You can use Alpha Picks as an idea generation tool, and that's the way I use it. Now, is it worth the money for an idea generation tool? I'd probably just get the premium, but again, it depends. You're not me. I like doing the work. If you don't like doing the work and just want to be spoon-fed some stocks, Alpha Picks is for you. And how do you get it? Well, it's the 3rd link down here. Now, say you don't want Trendspider, say you don't want Seeking Alpha, say you don't want Alpha Picks, you just want to do your own research, you just, on a free tool. Webull has a free desktop software, And I like it. If you want to get into technical trading, just start on a free tool. I used Active Trader Pro for years. I used Active Trader Pro. I didn't use Trendspider. I got to Trendspider because I wanted to back test strategies, and Active Trader Pro didn't allow me. So, Cade, don't think that the charting is just for day trading. It's not. It's for everything that I do. Kelly asked me to look at ticker symbol SNA. I don't know what SNA is. Snap-on. Snap-on. These are the tools. Stanley Black & Decker, I think, is a better buy. This looks weak, and I don't like the stock chart. $268 is the buy. It had one before. It lost you 2%. You make 20% in the algorithm, 26% buying and holding, 30 positions. You win 31% of the time. My guess is we're seeing some sideways trading here. Yes. On the weekly, we're seeing some sideways and some weakness. So you had a run up. You're under the 50-day. Now, every time it's come under the 50-day, you've kind of had an opportunity to buy, but it hasn't been super strong. Your support level is this previous high at about, say, 260. At 267, your support level is 260. Your MACD's crossing down. Your RSI is kind of just weak. If we want to look at SNA, we go over here. By the way, if you get Alpha Picks, it doesn't get you Seeking Alpha Premium. There are two separate subscriptions, just so you know. I use Seeking Alpha Premium far more than I use Alpha Picks. But here is SNA. I mean, it's a hold. The momentum is a C. The revision's B-. The profitability is why you're buying it. Valuation is a C. If we look at the PEG ratio, again, it's their growth. If we look at the growth, 3.69%. If we go and look at Stanley Black & Decker, which is SWK, I think that's a similar one. They're not making money either, but their valuation is a B, and that's a hold. If we look at their summary, let's look at their Wall Street price target. It's a hold from Wall Street. I mean, I think this whole tool segment, $92 for Stanley Black & Decker. If we look at SNA from Wall Street, it's got a 288, so 7%. They're both about the same. I don't know. I mean, doesn't get me excited. The weakness in the consumer kind of worries me a little bit. I'd worry a little bit about that one, Kelly. Farane. Would you consider FCEL, which is fuel cell, Plug Power, QuantumScape, which is QC, or CLENE? And what would be a good entry point? Thank you. I wouldn't consider any of them. But we'll take fuel cell, for instance. They're not making money. I mean, they're not making money. You can trade them, but this is going upper left, bottom right. I don't want that kind of stock. We'll look at Plug Power. Not Pluff. Plug. We want Plug. Let's look at Plug Power. Symbols. Plug Power. They're not making money. Whoa, where's it going from a stock? Upper left, bottom right. Well, look, not good. QuantumScape, same thing. This is solid state batteries, and upper left, bottom right. I mean, at least this one's not a super sell. Here, if you want to risk it, QuantumScape, risky but disruptive, and CLNE, same kind of thing. For me, I'm not trading any of these. Upper left, bottom right means I just don't want to even touch them. I don't want to touch them. And when you see, by the way, this strong buy from Wall Street, it's probably, 9 analysts in the last 90 days. They have a $7.14 price target. I mean, I still don't want it. Look, they've been bringing their price targets down. These guys just bring their price target down. I don't think you invest in this at all. What we want to do for something like this is you want to wait until, I'd rather see you, okay? Rather than have you buy here at $4 and have it trail down to $2, I'd rather see you wait and buy it at $4 in an uptrend and have it go to $6, or even have it go to $4.50 where you can pull it back. There is no reason to invest in those, Farafin. Nothing. Farane. Nothing. Absolutely nothing other than trading. So trade it. I mean, that's it. All you want to do. Now, scans. This is where I go into the 4-hour algorithm and I scan a bunch. There are a ton. And again, this points to when you typically see a lot of entries in the 4-hour algorithm, that means that the breadth of the market is good and we're going up because the algorithm is a bullish algorithm. It is not a short algorithm. So here, one yesterday that I have to apologize for, Sun, SUN. We talked about how yesterday it had weak candles. And I said you're under the 9-day. You don't have confirmation. And you don't want to be in it. Now, $50.58, it got you out on the candle yesterday. That's a 3.95% candle. That's a big move in a stock like this. This is energy. Energy doesn't move 4%. It doesn't move 4% at all. But we have confirmation. And boy, you're covering that gap up to 55.80. So you're at 55.11 right now. You're up about 1%. MACD's again, I just, Steve Kress was right. And Peter emailed me yesterday and he asked me about this. And he said, hey, it's one of Steve Kress's July, buy for now, because in July they have a strong July. Yeah, they have a strong July. Because if we look at the seasonality in Trendspider right now, for the last 4 years, 100% win rate. 100% win rate. Okay, that means 4 out of 4. If we go back to 2012, look, it's the best month of the year. Okay, best month of the year. So, Peter, I hope you didn't listen to a douche on the internet yesterday. He said, don't buy this one because this is a genius one. This is great. This is a good one. There are a couple of others, leveraged ETFs. They're all on the short side, which does present kind of an issue. I do think, again, we talked about it. I think there's a pullback coming. I don't think it's going to be violent because we don't have a huge kind of catalyst that will push us violently backwards. But I do think we have something coming back. XLI with a cross up 122. Now the algorithm makes you 37% on this one. I do not suggest buying or trading an ETF like this. I suggest looking for entries and buying and holding. So 122, not a bad buy. You're trading sideways on this one. We can see from a long-term standpoint, a weekly, the Bollinger Bands have cinched up. The RSI is coming off of a 50 and it's up at 58. The MACD is still high. Industrial's still in the run. Now, if we look at it from January, October of last year, you were at $99 on this ETF last year, and you just took off to new highs. Now, your resistance level is going to be 126. 126 is going to be your resistance level. So if you want to buy at 122, go and buy at 122. Just realize if it hits 126 and you all of a sudden pull back here and we get the pullback and you're back at 114, then you want to add more. That's it. I would trade this one dollar cost average it. Pepsi, Costco, we talked about. J&J, Lulu, Charter, Picard, AbbVie, MetLife, FedEx, GE, XLI and XLP. Those are the two sectors. So again, make sure you have your tools. Make sure you have your tools set. You should have charting software. You should absolutely have some way of looking up fundamentals, whether it's Seeking Alpha Premium, whether it's Trendspider, whatever you want. And you should have an idea generation tool, whether that's, scans in Trendspider or it's Alpha Picks. Alpha Picks, all the stocks that they pick, some of them I'm like, what the hell? And then I'm like, holy crap, look at the performance of that. They've had crazy good performance. So whatever you want, all of the links are there on Linktree. Just use the Linktree. You can get everything that you want. I will be back Thursday. If you have any questions, hit me up. Hopefully we all make money today. Wow, Dell's up another 3%. Okay, take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.